Welcome, everyone, and thanks so much for joining us for today's webinar. My name is Marianne Hensley. I'm the Vice President of Media Operations here at FreightWaves, and we are excited to present this webinar in partnership with TIA. I'm happy to welcome everyone on the line, and I'm also here with TIA Education Manager, Sean Tucker. Welcome, Sean.
Hello, Marianne. Thank you for having me. I just want to welcome all the TIA members who are on the call today. I'm the Education Manager with TIA, and I look forward to learning all about our presentation today.
Awesome. Thanks, Sean. So today we are going to be discussing data-driven decision-making in the transportation industry. So data within our industry has come a long way in terms of both quality and timeliness, with a lot of data being available in real time or near real time. But in order for that data to really matter, we have to be able to pull the right insights from it and use those insights to inform our business decisions. FreightWaves has done a great deal of work on this front, and I'm excited to be here with our very own Sultan of Sonar, Mr. Zach Strickland, to talk a little bit about the work that we've been doing in this area to help companies make use of the latest available data to inform their businesses. We'll also have a live Q&A with Zach following the presentation, so be sure to get your questions ready for him, and we'll do the best we can to trip him up along the way. Before we get started, just a couple of quick housekeeping items. First, if you have any questions at all, feel free to reach out through the chat function in your Zoom control panel for technical issues. Second, if you would like to submit those questions for Zach, you can click on that Q&A button in your control panel, and we'll get to as many of those as we have time for at the conclusion of the discussion today. Now, I will go ahead and welcome Mr. Zach Strickland. Zach, how are you doing?
I'm doing great, Marianne. Thanks for having me.
Awesome. So tell me a little bit about Sonar for those who may be on the line who are not familiar.
Yeah, so Sonar, for those not familiar, is a data platform that basically ingests data from a number of sources, a lot of software providers, a lot of, we have ELD information, we have TMS information, we have all sorts of anything you can think of information, telematics data and whatnot. And we pull it all in. We also scrape a lot of websites, web activity, et cetera, and pull it all in. And we try to make it as the most relevant information to people involved in the transportation market as possible. So we've presented it in this UI. So we've got this gorgeous little package here, and you can see that it's, I've got the map pulled up right now. So that's an easy visual tool to use to really help the user identify where they need to look first in the market. And then we also have multiple widgets and visualization tools, pardon me, about that enable users to quickly ingest information and make decisions as quickly as possible.
Awesome. And can you tell me a little bit about why this is important? What was some of the backstory behind Sonar and why we saw it, a need for it?
The transportation industry, anybody that's been involved in trucking or brokerage or, even shipping, there's a lot of anecdotal information. And it's basically word of mouth. Somebody says, hey, man, produce season's kicking off the West Coast right now. And it's almost too late by the time that you hear this. I remember myself back in 2017, we had a record produce season. It came in late and nobody really knew. It's generally pretty seasonal, as most things are in the transportation industry. But you never know exactly when it's going to start, when it's going to present a problem, and when you can take advantage of it. So you basically are always you're always being reactive to the environment at hand. And Sonar is the answer to that. I know myself specifically, I was in pricing at an asset-based carrier, but we also had outsourced transportation. So in that regard, I was kind of a shipper or a middleman, intermediary. And we had carriers that would show up at a specified price, and they would be there on time or they wouldn't, and we would move on, and I'd have to deal with that cost. And it didn't fluctuate that much in general, but there were certainly times where the costs would get out of hand, and there was nothing I could do about it. I would literally be pricing off of 2 days ago information, and then I'd have to hear about it from my bosses, and they'd say, why did we lose $500? And I think that's a pretty common theme throughout any market out there, because at any given time, any of these 135 markets you see spread out on this map can have some regional destabilization.
Awesome. And so really, who is Sonar designed for within the industry?
So Sonar has a broad audience. They have, effectively, we've pulled together so much information from the high level macro to the very daily tactical level information. I think brokers, carriers, and shippers are the primary user of Sonar, or the primary use case for Sonar at this moment. But there's also other people involved. You can have your high level executive and whatnot that can get in there and do a lot of trend analysis at a high level. There's indices in here that the industry uses quite a bit. The CAS index, for instance, which is a pretty popular indice, as well as the, we have a lot of macroeconomic, industrial production, durable goods, but we also have maritime information as well. So there's all sorts of data in here that's designed for a wide slew of people in the industry.
Awesome. Very, very cool. And so specific to trucking, I guess, how can you show some examples of how I might use this if I'm a broker?
Yeah. So, one of our most popular indices is the Outbound Tender Rejection Index. And if you bear with me for a second, I thought I had it pulled up. That is not the case. So the Outbound Tender Rejection Index, I'll just go ahead and explain what it is while I'm typing it in here. So anytime a shipper sends over an electronic tender, the carrier has an option of either rejecting it or accepting it. And when the carrier is rejecting more of these loads, that means that they are doing something else with their trucks. They're not showing up at your dock. They may have a better option to get higher revenue somewhere else, or they may simply not have a truck close enough to the market. And so that is, and you can see that we have a ton of different granularities of this, and that's really the core reason for finding this, is when we're seeing capacity kind of exit a market really fast, and that's what the Outbound Tender Rejection Index does. I'm going to type it in here. Outbound Tender Rejection Index. Let's just pick one. So across the market, I pulled up the local Outbound Tender Rejection Index. So we can see clearly if you're a regional broker, you're looking for loads, or you're looking for markets where there's not a lot of capacity. Anything in blue here is going to identify those markets where you're probably going to have the most difficulty finding capacity in these areas. We have a local Outbound Tender Rejection Index that's anything under 100 miles, as well as all of these length of hauls and various things like that. This is just one example. These are going to be the markets where you're going to need to increase your rates. They're going to be the markets that, if you're a shipper specifically, you're looking from the shipper perspective, you need to make sure that you go there first and call your carriers and say, hey, man, are you going to show up today to pick up my freight? Because that is a huge headache in terms of shipping. The Tender Rejection Index on the national level is a good indication of where capacity is in general. The National Outbound Tender Rejection Index, just to tell a little story, which this tends to help, paint the picture of what the tender rejection story's been over the last year and a half or so. So the market itself, you see this big mountain right here over the last year and a half, and this started way back in October of 2017. And tender rejections, you can see, clearly elevated last year. 2018, I should say, a very hot market. That meant that a lot of the brokers out there, while it was increasing, a lot of their margins compressed because they didn't know how fast the capacity was exiting the market. So their carriers that they normally had contracts with were priced off of these old, outdated contracts from 2016 when volumes were historically low because we were coming out of kind of a midi freight recession, if you will. And, as the carriers were rejecting more loads, they're invisible. So they have a handful of carriers in their route guides. The brokers go out and they set up these contracts. And as these carriers are falling out of their route guides and not showing up, the brokers are now having to go and pay a premium to cover their shippers on their side. So they're compressing their margins. The market's destabilizing. Once it gets to a point of where the brokers have figured it out, which can take multiple days, even weeks at that. For me, on my side, it took me a few weeks. And by that time, I was already hearing about it, and the time had passed. Well, this was an event, the hurricanes in 2017 really left a mark, as well as the ELD hard mandate or soft mandate in the late 2017 really left a big impact. And you can see 2008 peak season right here, we had a 25% rejection rate. That is historically high. Anybody that knows anything about trucking and carriers know that, you don't expect to see anything really above a 10% rejection rate because carriers are desperate for freight all the time, or at least historically they were. 2018, again, kind of written off as an anomaly, but I think we'll see a lot more of this on a move forward basis.
Awesome. And then kind of looking at it from the shipper and carrier perspectives, can you show some examples of maybe how they would use this?
Yeah, so shippers, have a lot of similarities with the broker aspect. As long as this rejection rate stays manageable down here where you see May, June, compared to 2018, of course I'll zoom in because the scale's kind of affected here, but you can see shippers, when they see this rejection rate go up, they know that they need to make sure that if they have any hot freight on their dock, they need to get it out as soon as possible. When this changes, when this environment shifts like it does, that has a big correlation to spot market rating. And I'm going to pull that up real fast. So the spot market, again, has a nice tight correlation with tender rejections. Now, I'll tell you there's a big difference here between tender rejection rates and spot market rating. You can see that they clearly move together. Underneath it is that blue line now is the national spot rate average, excluding fuel and other accessorial charges. And the tender rejection is in the green there. And sometimes they do not move together. And the reason for that is everybody's looking at the spot rate. They're not looking at tender rejections in general. So, tender rejections are something the carrier is actionably doing. Spot rates can be manipulated as people are posting loads out there that, maybe they're just fishing for a rate. They don't necessarily need to move those goods, but they're trying to fish for a good price or something like that. And that can be manipulated. The tender rejections, a carrier isn't going to reject a load unless they have a really good reason to do so. So from a shipper perspective, looking at tender rejection rates, that's going to give you a heads up in any of the 135 markets and various segments that they're involved in when they need to prioritize that freight.
Great. And if I am a high-level executive looking to use this platform and make decisions for my business, what are the key pieces of information or the key data sources or information that I'm looking at?
So we have more macroeconomic data than I could teach an entire course on. You'd probably need a few years, but that's not the point. It's there to be, certain of us have industry standards that we're going to look for. I think from a transportation perspective, a lot of people really look for, trucking specific, which there's just simply not a lot of. The CAS index, as I mentioned earlier, I've got that one pulled up right here. And what I have is one of my favorite ones is the cash shipments index. A lot of executives use this. It's based off invoices from CAS, who is an invoicing company, and it gives a good indication of what the volumes are. Now it's monthly, so you're going to look at it in hindsight. It's going to basically be a validation tool, but it also gives you a nice indication of, hey, you know what? Last month when we were 5% higher than we expected, the CAS index was also about 3 to 4% higher. So we were over it. We were outperforming the market a little bit. But at the same time, I know that, it's not necessarily something we're doing. It's like the market itself is heating up. Some of the other ones I have up here are the PPI. So they have a general freight trucking. It's a producer price index. This is going to give you an indication of where rates are going, especially on the contract side. It's macroeconomic government data. But again, if I'm looking for some sort of validation about what I've seen and what I can expect, you can see some of these trend lines are starting to pull back down in trucking, which is what you would expect. Inventory, this is total business inventory to sales. As these inventory numbers rise in relation to sales, that's actually bad news for the economy. You can see back here in 2016, there was a big jump in inventory levels. That's because they can't sell it fast enough. They're pulling all this inventory into the warehouses and they're not selling it. That means that people aren't buying their stuff as much. Not good news. It normally is pretty healthy. You can see here after the Great Recession, you saw the inventory levels spike up right in here. And in 2016, jumped up again. And now we're starting to see them creep up again. Not as high as they were in either of those 2 years. I know there's been a lot of recession talk, but it does look like there is some level for concern. But again, every year is not created equal. Macroeconomics is not an exact science. This year probably has a lot to do with the trade war and all the tariff pull forward. Again, employment levels and trucking, we could go on, and I'm not going to do that here. But just know that there's a lot of macroeconomic data here for the executive that's interested in transportation, because I think we do a really good job of dialing it in to what's relevant.
Yeah, absolutely. And in terms of maybe some of the more popular or useful types of data that are housed here, what are some of those, and can you show a little bit about maybe how you can use it?
Yeah, so if it's my first day at using Sonar, and I'm not really sure. I've seen some of those demos. I've seen some webinar, some guy chatting it up with somebody, but I got access to Sonar, and I want to dig into it. The first thing I do, you click on here and you can see your top 5 most popular indices. And I'm in trucking. I'm a broker. I'm going to go in here and I'm going to mess around. You see Outbound Tender Rejection Index is number 1 right here. That's the first one to go to. Now, it's not one thing. It's a hard ask for somebody to go in here the first day and just start typing in symbols, and that's ridiculous. But the first thing that I do, and again, I'm asking the people at FreightWaves to show me the first tool to use, and this is the first tool that I would use outside of the map, because I think it's a good starting point for most people once you get the basic concept down. This is a tree map. These are a series of tree maps, and what these are, anything in the top left over here is going to be your largest number. Anything in your bottom right is going to be your biggest, or your smallest number. So what I have pulled up here is outbound tender market share. These are the biggest markets in the country sorted to the smallest markets in the country. Ontario, California, for instance, represents 4.57% of the total outbound volumes in the United States. Dallas, 2.37%. So what this does is it gives me a way to see where are my predominant markets for volumes. If I am a broker, I need to know that, because these are going to be the markets that are going to, 1, have the best sales chances for me because they're going to have a lot of volume. Number 2, they're going to have the biggest impact to capacity in the overall market. So Ontario, Atlanta, Harrisburg up there around Philadelphia, Los Angeles, of course, Houston, Columbus, Ohio, all huge outbound centers for freight. That's a good starting point. It gives me a good concept, because I think most people don't have access to any data outside of their own in their company. I personally was very skewed towards our own internal data. The real value out there is knowing what you don't know. Like how was I supposed to know what I didn't know sitting in my cube in Chattanooga, Tennessee? I had no idea what I was missing. And that's what this data does. It tells you, it gives you perspective, because it is aggregated from multiple places all over the country. And it allows you to have an outside perspective. And maybe, if I'm a broker, I'm going to be heavily weighted towards shipments out of Sacramento, California, because we have a huge account out there.
Sure.
These are things that I'm just going to naturally, and there's all these biases involved in the human experience, where you're going to naturally just think that the world works the way that you view it. So you're going to think that Sacramento is one of the biggest freight markets in the country, when in actuality it's not. It's it might be, it's in the bottom half.
Sure. Great. And I want to talk a little bit too about seasonality, because if we think about produce in growing season, for example, it's definitely not a one-size-fits-all approach. And this is something that you actually showed me a while back. We were compiling some content and just really kind of trying to take a look at comparisons across different markets. We looked at kind of when produce season peaks, and it's definitely not the same. I believe one area we looked at was in Texas, and then maybe the other was in Florida, and kind of when those volumes start to pick up is not necessarily the same across the board. Can we maybe show a comparison here that demonstrates a little bit of that differentiation?
Yeah, so I've pulled up the ag rate product here. And what that's going to show you is this is the average spot market price for a produce load. So these are going to be your lettuce, the stuff that comes out of California, the strawberries, cherries, any kind of specialty crop item. We get an average price per truck. And it may not be representative of your specific loads in that area, but it is going to give you a good direction of where those markets are turning. And I have Los Angeles and Orlando, the Orlando markets pulled up. And you can see that they do have a lot of different seasonalities. Now, the most interesting thing to me is this 2017 Los Angeles rate. I'm going to pull that off, but you see how volatile it is. I mean, these rates jump. I mean, this is a weekly number, and they can jump as much as 50% in a given week. So if you miss out on that spike right there, or you miss out on this bottom, that's thousands of dollars. And anybody that's in the asset-based world knows that you cannot miss thousands of dollars because it takes a substantial amount of freight to make up for those misses, especially in the spot world. Brokers, I know, understand this and feel this every day. But right here, you can see, oh, I know that it's going to be produce season. We go along about our day. Everything's been pretty regular for the past couple of years, been actually really soft. And this is one of the reasons we saw those tender rejection rates go up. All of a sudden, 2017, we're up as high as we've been in 4 or 5 years, and looking at produce out there. And what that did was a lot of those carriers that had diversified into other areas, because you can carry other freight on refrigerated trailers or temperature controlled trailers. They were moving dry good freight. So that was additional capacity that left the market. And they're definitely going to bail out of their contract for 20, 30% more per load. They're simply going to go out to LA, pick up the lettuce, and haul it across the country for a lot more than they will that that pile of rocks that you're moving for $400.
Sure.
So, and you can see here the magnitude changed every year. Even in the late. This was a weird anomaly. I talked to several people about this one. November of last year, this secondary spike. This is when the rest of the lettuce comes out of California. You just don't see these things coming. And they're also a function of the market itself. So as capacity has been drained from the rest of the country, it's going to really have a magnified impact on these smaller markets.
Absolutely. We've got some pretty cool capabilities in here around even weather down to that. Can you show us a little bit of what Sonar has to show for that?
Absolutely. So weather, of course, is a big factor in the freight market. As I mentioned before, the hurricanes back in 2017, huge disruption to the freight market. Now, a lot of that had to do with not just immediate near-term impact, but also the ongoing recovery efforts. I think anybody that's been around for more than a few years knows that hurricanes and FEMA loads and all that stuff really can disrupt the market, because all these carriers will, again, just like with produce season or any other big event, they are going to bail on their contracted freight or their standard freight to go and service this freight down here because it pays substantially more. And carriers know that they have to go and make their money when they can, because most of the time they're operating, they're making 3, 4, 5 cents on the dollar for every dollar spent. So they have to go out there and make their money when they get the opportunity. So that's why we have weather in here. And this is our critical events map. And these little circles right here are going to give you, a quick overview of which markets are at risk for severe weather or hurricanes or earthquakes, volcanoes, if you're, living close to one of those, anything like that. Also, it gives you a good overview of, things like fire conditions, anything that could potentially stop freight from moving across the country, or, in the case of hurricanes, really get your attention down to areas where it needs to be. Especially in port cities like New Orleans or Savannah over here, when hurricanes are hitting those markets, that has a huge ripple effect downstream on freight movement and freight flows. Also, on our regular map, which we are actually going to combine these two maps in the next few weeks, we have road conditions, which I think is a fantastic feature. We also have road cameras. You can see traffic on here, weather, all sorts of things. So you can zoom in, and it's going to give you a deeper, granularity in terms of roads. It's not just going to be your interstates that you're looking at, but road conditions is going to tell you when a road is icy, when a road's been closed, or there's traffic conditions. Obviously, all of these things are extremely relevant, but we also have a 48-hour forecast on the road conditions. So for that dispatcher, they can look on the next 48 hours and see if they need to potentially reroute some of their trucks.
Yeah, and I'm looking here and seeing a few shades of blue and some white. Can you give a little context for that?
Yeah, just underneath that is actually just this is our freight data. You know, I think I had the outbound or the local tender rejection index underneath that, the blue. So you can overlay our freight data with the traffic conditions, which I think is extremely powerful, especially on a daily basis for multiple users. If you're trying to track freight, you know, moving out of the Chicago area, and there's high levels of rejections, increasing volumes, et cetera, and all of a sudden the next 48 hours there's an ice storm expected to hit, you can get down all the way into, you know, local roads. I'm not going to do that because it's going to stress the system real bad, real bad. But you know, you can make plans and arrangements in the future for things that are occurring. And you know, I didn't mention this about our tender rejection data before, but it is yesterday's data today, and it will not change. That's very different from some of the load board information that will change over the next 2 weeks. Things that, you know, get thrown out today have all sorts of things occur to it over the next, you know, a 2-week period in terms of how they change the price on it or the routing or you know, there's all sorts of things that go different there that aren't reflective of the actual circumstance.
Yeah. Another cool thing that we have are heat maps. Can you show maybe a heat map of something that might be interesting for people today?
Yeah, so pulling up, I'm going to take off some of the roads here so you can see it clearly. We do have other things where people can actually overlay their data. I should probably point that out. The real value of Sonar isn't necessarily what it's going to tell you about what you don't know, but it's your ability to integrate your own data with Sonar and figure out where your holes are. What are you missing? And we have that ability as well. But just to pull up, let's see here, trying to think what a good heat map would be for our people here. Pull that up. The road cameras too are pretty cool. I should have mentioned that too. And there's a snowstorm. You can see an actual road map on the. You can see the conditions on the road. Let's turn those off though for now. Looks like our internet's having a little bit of struggle here. A lot of information.
We have the spinning wheel.
The spinning wheel. So just to give context, the heat maps are going to be changing in a few weeks as well. So we're going to change this around, and any of, you know, our data is now going to be presented in 3D. So you're going to be able to see these heat maps, and, you know, now that I've got some reds on here, and I'm going to explain what this is real fast after I tell you. So data is not necessarily two-dimensional all the time. We're actually going to change this to where you're going to be able to combine two different data sets, and one's going to give you depth, and the other one is going to give you the colors like you see here. And they're also going to be on a scale that you're going to be able to modify. You're going to be able to tell, you know, how important is this market in relation to the others. So I've got the head haul index heat map pulled up here, and what this is, it's a measure of supply demand in a market. So how many loads are going into a market versus how many loads are leaving the market. It's basically our version of how backhaul-y is a market, or how head haul-y is a market. You can see anything in blue, the outbound loads are outnumbering the inbound loads. So that is a signal of increasing rate pressure, because anytime that you have outbound outnumbering the inbound, that means that there's going to be a chance that you're going to run out of trucks, you know, and just vice versa. You can see down here in Miami with the dark red. I think anybody that knows Miami knows that trucks go in and they don't come out. And this situation changes over the course of time. I think one of the big things that I've learned after messing around with some of our data is Miami is generally always a backhaul, but it changes throughout the year. There's times where this market becomes a lot better. So as a broker, for instance, I would go out, I would start booking more freight inbound Miami. I might actually give a better deal to go in there to get some more volume, you know, especially if people are calling me during this time of year, because not everybody knows that, you know, Mother's Day flowers are going to start rolling out of Miami and, you know, in April and May. They don't know that watermelon season's kicking off. A lot of these small carriers pick up a lot of this freight, and they're willing to go in there for that. And you can go out there and find some deals. So that also enables you to keep your margins high. Yeah.
Obviously, you can kind of see month over month or year over year changes. Kind of going along with that, maybe show us a trend. Maybe show us a year over year trend where it might reflect peak retail season or produce season in a either nationwide level
Oh yeah, I
or
got
a
you.
given market.
Yeah, let's just do national volumes. And this one is probably one of our most popular
Mm-hmm.
because it gives us a good view. And I think it's telling us a good story right now, honestly. So as our outbound tender volume index. So it's basically a proxy for truckload volume in the United States. Uh, the green line represents 2018 volumes. And you can see a clear seasonal pattern here as volumes go up. And this is Memorial Day. It has a nice little frothing impact to the index because it is a 7-day moving average. So that 1 day of no volume can last for about 7 days, but then it picks back up. And the reason we do that is because everybody operates on this real industrial pattern of come in Monday, I get about 5 cups of coffee, do what I can to get through the day. Tuesday, I'm starting to get some steam, getting my wheels under me. Wednesday, I'm ready to go, pushing it out the door. Thursday, I'm getting as much done as possible. And Friday, I'm ready to leave. And it looks like this big, EKG. So it's like a heartbeat every week. So we had to smooth that out so you could actually see the trends because that's where the value lies, is the trend line. So increasing volumes throughout the year, 2018 into June, and then all of a sudden July, as you would expect, things fall off in July. It's the second most vacation month of the year, so that reflects in the freight volumes. And then it really died off last year. Like October was a tremendously soft month for a lot of people as the third quarter ends and it just troughs out. Well, we saw the same pattern you see here in the blue line for this year. Right here, this is an anomalous drop that nobody could predict showing up. I didn't see this coming at all. And volumes just dropped off the map in May. This is right after the Chinese tariff implementation date of May 10th.
Yeah.
It's the only thing event-wise that makes any sense or correlation. And still to this day, I don't know exactly why it affected so many people, but it did. And that's that's going to be a big factor throughout the rest of the year. That missing in May isn't like missing in January when freight volumes are soft. It's a big miss, especially for a lot of asset-based carriers. That means that a lot of these revenues they were budgeting for, they're not going to be there this year. So they're going to basically, I think that's going to continue to see the supply side really, slough off come through the winter. And right now, volumes are starting to trend back in line with 2018, which is not good. We had a pretty strong start to October. We thought we were doing really well. We were still 6% up year over year, but now we're really starting to contract and move a lot closer in a different direction as volumes get a lot softer.
Yeah. And we had a quick chat question come in potentially from a user. It says, what display option is this? Can you speak to that?
Yeah, this is the chart feature. So up here, you can add a widget. We have news feeds. You can pull out Twitter and all sorts of things. So if you're looking for a specific commodity or you're trying to track a specific company, out there trying to get alerts on it, you can put that in here. News feeds for anything. We really filtered it down to transportation related as well as financial markets, just because those are two things that go hand in hand. There's a calendar feature, but this is the chart feature. And all you do to create a chart is you just click on this button and it pulls right up. And all you got to do is select from one of your menu items and have at it. So yeah, I have multiple charts made multiple times. So
cool. And kind of going back to the widgets, obviously there's a video function in there. How might somebody use that? Yeah,
so we have a lot of video content. And you can put this up, and obviously there I am right there. Great to see. But we also put out, obviously a lot of video content about what we're seeing in our data. So maybe you're a new user in Sonar, or maybe you're not a user at all. Come to the website and you can check out. We use a lot of our data to make a lot of decisions, or try to give as much insight as possible to the industry as to what we're seeing and what you can do with some of this information. Just like I said before, this is not going to be your anecdotal information. It's going to be very data driven. I know I used to make a lot of decisions based on something somebody told me that I heard on the phone. The Fresno market is doing this and it's just real soft. Or, if you're a higher level executive, I mean, I was in pricing and I had to hold the sales team accountable for whether or not they were able to go and sell a certain rate for the capacity. And they would, come back with, all the excuses you'd expect. Well, man, you're just too high and they're doing a lot better. Well, now I could have gone and said, well, hey, the market itself is super hot. You should be able to go and negotiate a higher rate.
Yeah.
And vice versa. Obviously, I could give them a little bit of a hand on some of the margins if I know that the market itself is soft as well.
Yeah, absolutely. And so much of what we're talking about really here is all about trucking, but Sonar does house data on other modes as well. Can you show some of those?
Yeah, so maritime, air cargo, rail, intermodal, all of these things are in here. Something I've learned a ton about over the last year is the maritime side of things and how it's impacting the domestic freight market. I'm going to clean this one up a little bit so it doesn't look like a spaghetti chart. But what I've learned about maritime, and obviously this is a big deal in today's freight world with the trade war, as China, and we're sourcing our goods differently. We don't manufacture very much in the United States anymore. About 70% of our GDP it comes from service economy. That means that it's software providers, it's people that are doing financial services. They're not necessarily making anything. They're providing services, healthcare, all that kind of stuff. That's what's driving our economy today. Well, that's not what goes on trucks. Mm-hmm. A lot of that freight comes from overseas. Most of it comes from China, a little bit from Mexico and Canada, but a lot of it comes from that area. And as we're seeing goods flow into the United States, and what you're looking at is the U.S. Customs maritime import shipments for the retail industry. So we can get this granular with it. This is kind of an advanced stat here, but retail is what drives a lot of the freight flow in the fourth quarter.
Sure.
That's why I have it pulled up. And just to show what an impact the trade war had on the maritime sector, at least. And we did see this reflected in the freight economy in 2019. But you see right here, these are shipment counts for retail goods coming into the country and through customs during 2018, 2019. Huge spike because this is when all the tariffs and the trade war was getting really heated. Cooled off until about May, but at that point in time, a lot of these shippers had already brought all this freight into the country. So warehouses were full. I think we were looking at 86% full utilization in the warehouse industry back during this time. So they really have action-packed the industry with a lot of potential energy for freight flow. And it's just sitting in warehouses. Now, we did see a leading indicator that a lot of these goods just repositioned. They came into the port and then they put them in a warehouse and that's where they sat. So they moved them around locally and now they're ready for the fourth quarter this year where they're sitting ready to move. So this right here is the spot rate for the maritime industry, if you're interested in that. So you can see that the retail goods actually had a notable impact on the spot market for container shipments, international.
Awesome. I want to kind of wrap it up here to make sure that we have some time for audience questions because those have been coming through. Thank you guys for those. If you haven't submitted your questions yet, feel free to go ahead and do that. We'll get to as many as we have time for, and we can also follow up with you after the webinar if we're not able to get to it live here today. Zach, you mentioned or alluded to, some upgrades, maybe some additional changes we're going to see within the platform in the coming weeks. What do we have to look forward to here?
So we've got 5.0 coming out at our FreightWaves Live event in Chicago, November 12th. That's where we're going to unveil everything. So just to give a little teaser, we have, like I said, with the maps. So you're going to be the map feature is basically going to change dramatically. You're going to be able to combine layers of data in the maps. You're going to have some advanced mapping features coming through to where you can combine layers of data in ways that I haven't even seen before, where you're going to be one of my favorite things to do with this new thing is combine volume and tender rejections or something like that gives me a sense of, okay, this is my biggest market that's having the biggest volume, but here's where the capacity changes are. that allows me to see 2 items at once. So I don't have to flip through the screens to see that. Also, we're going to have some potential forecasting information in this next version, as well as the potential for some rate prognostication.
Excellent.
Yeah.
Lots to look forward to.
Yeah. So I can't give full details because some of it actually isn't finished yet, but
Sure.
it's scheduled to be done for our event here in Chicago.
Awesome. Perfect. Well, let's go ahead and dive into some questions from the audience. First question, it says, you said integration of your own data onto this platform is one of the most valuable features, I guess, in talking about how companies can integrate their own data here. Can you expand on that, specifically from a broker's perspective and leveraging your own data on a daily or weekly rate wise against market rate data available on Sonar?
Absolutely. So, the feature that I was talking about is, say you have, like I said, most brokers, carriers are very heavily weighted towards a specific shipper, specific industry, something of that nature. Maybe they're also weighted towards a specific market. So there's ways that you can overlay this in our in our platform. And one of the ways that we can create a CSV file for you, and you can upload, say, your location data, and it's going to be positioned. Say you want to look at, where am I looking at in terms of head haul index, and we can map and plot those over the top here. So say you've got a heavy exposure to the Columbus market in Ohio. It's a pretty head haul market, so I feel pretty good about that. But then I don't have any exposure down here in Little Rock. Well, I can go down here and I can see clearly, once you overlay that information, it's going to stick out to you like a sore thumb that you have some potential in Little Rock. The freight volumes themselves, the market share is probably one of the more valuable tools for looking at that. But also in terms of, if you have, say you have 4 or 5 DCs that you're having trouble with, you can overlay that data with the tender rejection map. And it's going to show you, you'll have these little dots sitting over the top of it, exactly where some of that exposure is. So you can go quickly that day, you can see, oh, I've got a blue market underneath my tender reject, or underneath my my DC in Little Rock. I can go and cover those that day as a priority. But there's also another tool, the API. If you were to actually pull this into your own system in TMS, we also offer an API that allows you to integrate it the way you want to integrate it into your TMS as well, which I think is also doubly as powerful.
Yeah, super cool. And then what role do you think emerging supply chain networks, both private and public, such as Project 44, FourKites, TradeLens, CargoSmart, play in this data-driven analysis?
Oh, wow. That's a good question.
My goal was to stump him, so thanks, Eric, for that.
Right. No, those guys for sure offer probably we're in that broad category where we're trying to solve everybody's problems all at once. They're going to offer a little bit more tailored solutions in terms of, especially the sectors that they serve. They're definitely going to be a little bit more tailored towards the brokers, towards some of the shippers, for instance. They're going to be able to offer them a little bit more solutions in that way. Our goal really is to provide the information to the market itself. So they're going to be a little bit more specific. We're not necessarily consultants here. They definitely can work on some more targeted solutions, whereas we're trying to basically say, here's the information. You guys do what you need to do with it. We'll try to help you along the way, but they're definitely in a different category from us.
Yeah, absolutely. All right. And is there any data referencing LTL, or does truckload dictate LTL activity?
So I was from LTL, and I know that, kind of the idea, especially my own idea when I walked into the building before Sonar was even presented, was that LTL was insulated from truckload, and that's actually true to an extent, but they move hand in hand. Most LTL carriers move between their hubs with truckloads. It all gets consolidated. They have a P&D hub and spoke structure, and then they move from Atlanta to Dallas, Dallas to Oklahoma City on a truckload. They don't just move 3 pallets from Atlanta to Dallas if they can help it. If they do, they're not going to be in business very long. So yes, there is. So the data right now is tailored towards the truckload side, but in terms of percentages of what the capacity is doing in the market, LTL is a very small fraction of that. So truckload will give a lot of insight into the LTL world in terms of when you see capacity deteriorating really quickly, you should see your weight per shipment go up in the LTL world because those shippers are now chopping up their loads. And they're also going to take advantage of those linear foot rules that you have. And they're going to ship, the 11 feet of freight versus, just to make sure that they stay right under your little borderline for, but that's going to wreck your capacity. So yes, there's, is there LTL specific information in terms of revenue per hundredweights or, any kind of shipment counts in there? Not today. We're working on that. We actually have some forward-looking plans for that level of information. But if you're looking to measure how to manage your network, this data it does have some use cases as well.
Cool. And what about empty container availability? Is there a view in Sonar that shows you that?
So right now we have, and we just, we were re-ingesting this data specifically, but we have rail containers. Let's see if they put it back in here. So it's not going to give you empty container counts per market per se, but it is going to show you, while I type it in here, see if it's in there yet. Doesn't look like they put it right back in yet, but we will have that soon back in here. We had rail movements, rail cars for 20-foot empties, 40-foot empties, 45-foot, 53-foot empties, moving across the country on the rail. So it's offered by lane. So Chicago to Los Angeles, for instance, would have the volume of empty rail cars, containers going that direction on any given day. It's daily information. So you could get that'd be a good proxy for seeing where the empty rail car containers are.
Cool. And then in terms of kind of international views, for example, can you focus on air freight into and out of APAC or compare capacity between modes?
Yeah, you sort of can. You can use, I think I actually found, so we've just updated a lot of this information. We've got a lot more rate information internationally. I'm pulling up our Drury air freight rates for multiple lanes. I think Hong Kong to anywhere is about the most interesting one. As we're entering peak season here, you can see that we have not seen any dramatic shifts, and this is $3.18 per pound, or per kilogram, I should say, international. So, this will help give you an idea of air cargo capacity, international capacity. I found that they're all pretty connected in terms of shipping from China to North America. These actually fall right in line with some of the container rates that we see coming into the United States. This was a big peak year last year, 2018, for air freight coming from China. And this year's looking a lot softer so far. We also have some domestic air freight volumes that we actually forecast capacity with. It gives you a trend line for how much capacity is available on the belly of Delta or United over the next month and a half, I believe. Is what it is.
Cool. Mm-hmm. And how relative is this data to high value or high touch freight?
Oh, so right now, obviously, air cargo is going to have a lot more high value freight on it in general, just if you know that, because it is more expensive. But we don't have anything right now that disseminates your high value freight at this moment. We are looking at some data sources that are going to give us a better insight into what's going on there, but they're not in there right now. So right now, it's very high level. That's kind of our goal in general. We're working on the granularities moving forward, but right now it's very high level because that's everything trickles down from, truckload capacity in general. As you get into reefer and dry van and intermodal, all of it kind of feeds off of that because right now that's the most competitive sector. So if you see, your standard truckload capacity go away, that's also going to impact your high value. That means your high value freight's going to go up 10% versus the truckload's 5%.
Great. Next question. Can we upload our sales volume to optimize our shipping network?
Now that's a little bit more specific to your company. Mm-hmm. That would be something that I'd recommend you actually pulling in the Sonar data into your own That way, I mean, you can upload whatever data you want over the top of our UI, but I would recommend pulling that information into your, specific interface, or we could even do it for you. I mean, if you wanted to, we have a team of data scientists that are very good and very fast at, helping tailor whatever solution you need with our data to yours, especially if you are, resource limited.
Okay, great. And are you able to see cross-border volume, so Mexico to US and US to Canada, for example?
So we have that offered in a few different ways. If I can remember the ticker. So we have Mexican crossings for specialty crops, but we also have rail data. And again, I'm fighting the internet. But this is the specialty crop Mexican border crossing, but we also have rail data that gives you various commodity level in terms of, I'm pulling up intermodal containers from Mexico. So you can see the cross-border. These are the containers that are coming from Mexico to the United States. And we also have that for a lot of different, coal, most of the main, stuff that you see on a rail car. You'll be able to see that, like steel scrap, corn, grain, anything like that. We have all of that volume as it's moving across Canadian and Mexican borders.
Okay, great. And we've piqued someone's curiosity with the forecasting capability that's coming. What can you share with us about what that's going to entail?
So there's going to be the long run and the short run view. Now, I think the long run view is more tailored towards like an RFP situation where we're looking at rates over the next year in terms of what do we see, historically, and we're going to try to apply that to a pull forward basis, combining various sources of our data. That's going to give you a general direction of rates. It's like a weather forecast. You get about 3, 4, 5 days of pretty reasonable accuracy, and then all of a sudden you have a general direction that you need to go in, because when you get too granular with it, too specific, the forecast falls apart. So we're looking at a very near-term forecast that's going to give you direction of the market over the next 7 days or so. And then we're looking at a long-term, like next 6 months forecast. It's going to give you more of a direction. And I don't have the specific output that looks like today, but that's the idea.
Okay, great. And are you able to share a bit more about the rate prognostication and what that might look like? What you can.
Yeah, I've pretty much told all I can about
Okay,
that one, but
gotcha.
it's upcoming and it looks pretty cool. As a pricing guy myself, I've played around with it quite a bit. You're gonna have fun with it.
Very cool. Is there data on bulk tank trucks?
Not today. No, there's not. We do have in some of the tender data, there are some bulk loads in there, but it is a very minimal amount compared to the rest. So, and that's representative of the market itself. But yeah, we have also, just like anything, we've looked into that one. That one's further down the road in terms of something that we can pull in here, but you never know. Things happen overnight here.
Yeah, that's absolutely true. And I'll wrap up with one more, because I know people have this question more than just the person that asked it. And obviously we're not able to get too incredibly granular on this just to protect our partnerships. But overall, can you share a little bit about where all of our data kind of comes from?
Yeah, so it's, like I said before, it's a conglomeration of, mainly software providers, people that, they have a product, think about CAS. Their product is not counting invoices and the data that comes from it. It is invoicing. They're an invoicing company, so they really don't have a need for the count of invoices that they process on a daily basis. So they use it to turn it into an index. We have ELD providers, and anything that you can think of that's transmitted electronically is pulled in, especially if we have specific software providers that will do it for us. Then we clean it up, because a lot of that data comes in extremely dirty. I spent a lot of my career actually as a data janitor, going in there and cleaning up my own company's data. So we have to do a lot of scrubbing on a lot of this stuff too, because again, like I said, these software providers and electronic sources, they're not data companies. They were there to design a product to do a specific task, and that's it.
Absolutely. Well, everybody, that is all that we have for today. So thanks so much for taking the time to listen in. Thank you to Zach, our Sultan of Sonar, for being here today and walking us all through this. And also to our friends at TIA for partnering with us to present today's webinar. By the way, if you are listening in as a TIA member, you will receive complimentary access to a new white paper titled Why You Should Start a Brokerage Within an Asset-Based Company. That is from the TIA to thank you for joining us today. So look for a link to download that in your email inbox very soon. We appreciate you being here and hope you will join us for another webinar again soon. Have a great afternoon.